According to supply managers in the 9 Mid-America states, how is the economy performing?
According to our survey of supply managers in 9 states, that's manufacturing supply managers in 9 Mid-America states, the overall index was down for the month, down to 60.0 from 65.9 in April. So the economy, as we're seeing it, as we're measuring it, is slowing down. The regional economy is slowing down. We asked the supply managers about the greatest economic threats for 2022, and not surprisingly, 2 out of 3 named supply chain disruptions. So supply chain disruptions remain a big issue with supply managers and a big negative issue. 1 out of 4, only 1 out of 4 indicated that the inflationary pressures were the biggest challenge for the rest of the year. Less than 3%, fewer than 3% indicated labor shortages. Now that's unusual. 3% indicated that was the biggest issue, and another 7% reported higher interest rates. So those are the biggest challenges facing supply managers. And for May, 6 out of 10 expect growth to slow for the rest of 2022. Now it's slowing, but still positive. Let me bring up the graph. This is a graph showing the Creighton survey versus the national survey, which the results will come out later on this morning. And you see that the Creighton survey in blue there has turned downward, but still above growth neutral, still pointing to growth in the weeks and months ahead. The U.S. number will come out this morning, later on this morning. I expect it to be down a bit, but still positive. So things are looking reasonably good, but slower growth in the weeks and months ahead.
What were the hiring trends?
Hiring was down for the month, that's the month of May, compared to April. The reading for May was 53.4, which was down from April's 62.1. The regional employment still remains well below pre-pandemic levels, about 1.4% below pre-pandemic levels. Every state in the region, except for Arkansas and South Dakota's non-farm employment, is below pre-COVID levels. The U.S. number likewise is below pre-COVID levels, about 0.8%. So we're still seeing we're crawling out of this economic downturn, but we're doing somewhat better, and we'll see how that trends out in the weeks and months ahead.
What inflation trends are you noticing?
Inflation took a big jump in the month of May. The index rose to 91.7, and that's from April's 89.7. And I expect we asked the supply managers about looking ahead for 2022. How much do they expect prices to grow? And for the next 6 months, they expect 8.7% growth. Of course, you double that and annualize it. That's 17.4% in the wholesale price index. So that's some big time numbers in terms of growth in wholesale prices. So of course that'll spill over into consumer prices in the weeks and months ahead.
What is the economic outlook?
Inflation will remain high for the rest of the year, but I expect it to come down a bit. There are some indicators that inflation is declining. Economic growth will likewise slow for the rest of the year, but still in the positive range right now. Supply chain disruptions and delays will lengthen, but I think even there we'll see some improvements there. Short-term interest rates, by the 1st of August, we're looking at 1%, 1 percentage point higher short-term interest rates. In other words, the Fed's going to be raising rates in June by half a percentage point. They're going to be raising rates in July by another 0.5 percentage point. So 1% higher prime interest rate will be up to 5% from current 4% rate right now. And we're talking about by the end of the year probably up by another 1.75. Now that's 1.75 in total. So that'll bring the short-term interest rates, the funds rate, up to 2% by the end of the year. Long-term interest rates are going to be rising a bit in weeks and months ahead, but the growth there is not going to be nearly what we're seeing at the short-term interest rates. Keep an eye on the bond rates. Keep an eye on bond yields, particularly the 10-year Treasury. When the 10-year Treasury ticks up, that means inflation's having more of a powerful influence. When it comes down, that means the probability of a recession is increasing. Right now it's 2.7. If that yield should go and break 3% again, that's inflation looking like we're going to see even more interest rate increases. If it comes down, say to 2.5, 2.4, that's indicating the economy is slowing down, higher risk of recession. The employment report this Friday, keep an eye on that number. That number is going to be down from last month, but still probably in a pretty good range. We're talking about 100 to 200,000 jobs added for the month of May, and that's not a bad thing. Price of a barrel of oil, keep an eye on that. It's now breaking above $115 a barrel. And of course, with the summer driving season, we're seeing oil prices grow, gasoline prices not far behind that. We're seeing that. Also, natural gas prices as well. Listen carefully to what the FOMC, what's Federal Reserve's Open Market Committee, what those members are going to be talking, and they do it intentionally. They're trying to tell the market what they're going to be doing, and if they begin indicating that they're going to be more aggressive in raising rates, believe them. If they're saying they're going to be less aggressive in raising interest rates, believe them. And that's something to really listen up for in the weeks and months ahead. But overall, again, to summarize, the regional economy is slowing down, slower growth, and we're seeing that. We're going to see it at the national level. We're going to see higher interest rates. But all in all, growth continues to look reasonably good until we meet again on the first business day of the month of July. May your economic cup runneth over. Ernie Goss here from Creighton University in beautiful downtown Omaha, Nebraska. Thank you.